Hello, and welcome back to our channel Business Class. In today's video, we'll be discussing how Sam Bankman-Fried, aka SBF, crashed the entire crypto market. Sam Bankman-Fried is the CEO of Alameda Research, a trading firm that trades financial markets using advanced technologies. He also founded and ran the cryptocurrency exchange FTX. Bankman-Fried is well known for his expertise in trading financial markets using machine learning and other advanced techniques. Let's walk through as to what reasons led to the FTX market crashing. Switching to high-risk betting. The first hypothesis is that the young traders at Alameda, which once ranked as one of the top cryptocurrency trading companies in the world, weren't as experienced as their reputation suggested. When he founded Alameda in 2018, Bankman-Fried, a highly regarded trader, focused on exploiting price variations in cryptocurrencies across markets. The following year, however, he changed his main focus to the introduction of his trading platform FTX. Gary Wang and Nishad Singh, two of the most talented employees at the trading firm, were brought with him to FTX, according to Doug Colquitt, a longtime high-frequency stock trader turned cryptocurrency trader. Alameda shifted away from its initial focus on making fast market-neutral bets that weren't dependent on predicting whether cryptocurrencies would rise or fall after the rise of Bitcoin in 2020. Some traders think Alameda changed its strategy as a result of losing its competitive advantage. More seasoned companies like Jump expanded their cryptocurrency trading operations. As one of Alameda's co-CEOs in March 2021, Carolyn Ellison tweeted, "Also relatable is the point where he realizes he's been wasting time trying to trade back and forth for a few points of edge. And the way to really make money is to figure out when the market is going to go up and get balls long before." She appeared to be acknowledging this pivot, utilizing leverage on top of significant wagers. Alameda was probably using too much leverage or debt that could increase wins and losses, in addition to placing large bets. One way the company's executives reportedly did this was by pledging loans as collateral for largely illiquid cryptocurrencies, such as FTX's own token, FTT, and a related one, Serum. For instance, Bankman-Fried assisted in the development of Serum, which was made public in 2020. Only 10% of the coins in circulation in Serum were initially freely traded, and the remaining 90% were kept locked up for many years. However, he could theoretically generalize and assume that if the market value of the entire supply of coins was $10 billion, and the Serum in circulation had a value of $10 billion, he could then apply for loans using that higher valuation. According to cryptocurrency investor Jason Choi, Bankman-Fried used this strategy with additional digital assets that came to be known as Sam coins among industry insiders. Borrowed money is being used to buy other cryptocurrencies. Venture capital investments were another capital drain. PitchBook claims that Alameda invested more than 150 times in the cryptocurrency sector, including in the Bitcoin miner Genesis Digital Mining, and the dysfunctional crypto broker Voyager Digital. Evidently, Alameda borrowed money to pay for those wagers. Lenders reportedly tried to get the money out of those illiquid investments as the crypto market crashed. It has been reported that executives from FTX and Alameda then attempted to recoup some of those Alameda loans using funds from FTX customers, borrowing for additional major spending. Even the attorneys, financial investigators, and bankruptcy veterans who have taken over a sizable portion of the finances of the Bankman Group of Fried's companies remain a mystery. However, according to documents filed with the bankruptcy court, FTX executives also borrowed billions of dollars from Alameda to pay for everything from political donations to Bankman-Fried's $650 million purchase of a 7.6% stake in Robinhood. It's unclear how, in addition to everything else, these loans might have increased Alameda's losses, according to a filing made on Thursday in a Chapter 11 bankruptcy case in Delaware. Alameda alone has unpaid liabilities of $5.1 billion. Shady record-keeping and accounting issues. An additional, possibly significant factor in Alameda's losses was the appalling record-keeping and accounting practices employed by Bankman business. According to a bankruptcy filing, Fried's FTX customer deposits were not tracked, making it unclear in the bankruptcy proceedings what is owed to customers. As an illustration of this misunderstanding, the Thursday filing in the Delaware bankruptcy case lists only $6.4 billion in liabilities. in contrast to the FTX balance sheet, which shows $8.8 billion in liabilities. The numbers are still fluctuating, but it's unclear what caused the discrepancy. John Ray III is appointed as the new CEO of FTX, in charge of overseeing the bankruptcy and a workout veteran, stated in the filing. This balance sheet was produced while the debtors were controlled by Mr. Bankman-Fried, and I do not have confidence in it. The irresponsible accounting practices of Bankman-Fried seem to have been present from the very beginning of Alameda. Crypto venture capitalist Alex Pak was considering investing in Alameda at the beginning of 2019. But after doing his research, he discovered that the company had lost $10 million in a single month, a significant amount for such a small company. Bankman-Fried explained that it was caused by trade errors when Pak questioned him about it. Pak claims he continued to inquire but was unable to ascertain what had taken place. At one point, they merely apologized, explaining that their record-keeping was inadequate at the time. "We are unable to address all of these concerns," Pak declined the offer. Aware of what he perceived as significant recklessness around risk-taking and extremely poor infrastructure and accounting, he thought they were smart traders but left anyway. Because you have to create your own trading systems today, according to Pak, tracking positions in cryptocurrencies can be particularly challenging. What's more, as your book of business expands, the task becomes exponentially more difficult. And according to Pak, it's not inconceivable that Alameda could have accrued much more debt than they realized, as Bankman-Fried has claimed, if they had started with poor accounting systems. The collapse of FTX is having an impact on the cryptocurrency market. With a significant exchange and trading company under its wing, numerous loans to and from other players, and a number of tokens with historical market values in the billions of dollars, FTX had a significant influence across the sector. BlockFi Incorporated, a cryptocurrency lender that received a line of credit from FTX in 2022, filed for bankruptcy the same year as FTX. Genesis Global Capital, which had loans to Alameda that were still due, is attempting to quickly raise a sizable sum of money. Mr. Bankman-Fried hasn't shied away from the spotlight since leaving FTX. Mr. Bankman-Fried has repeatedly stated in media interviews that he had no intention of defrauding anyone. He has also made an effort to separate himself from his trading company. "Even if I had wanted to, I didn't have enough brainpower left to comprehend everything happening at Alameda," prosecutors and regulators have reported. On December 12th, Mr. Bankman-Fried was detained in the Bahamas. He was charged with 8 criminal counts by the Southern District of New York's U.S. Attorney's Office, including conspiracy to commit wire fraud, commodities fraud, and securities fraud. On December 13th, the Securities and Exchange Commission and the Commodity Futures Trading Commission also filed a lawsuit against Mr. Bankman-Fried on the grounds that he had misappropriated client funds. He was given over to American custody the ensuing week. On January 3rd, Mr. Bankman-Fried entered a not guilty plea to all charges. His trial was scheduled to start on October 2nd by a judge. Ms. Ellison and Gary Wong, 2 former deputies of Mr. Bankman-Fried, entered guilty pleas to related criminal charges. End of cryptocurrency? The entire industry has been exposed, but it's hard to say whether crypto will be doomed for the foreseeable future or if the space can eventually recover. Retail investors will struggle to regain the confidence necessary to make significant investments in the crypto space, given its many flaws and risks. This past year, many retail investors witnessed their hard-earned money evaporating and disappearing. This sums up the video. I hope you all liked it. With all the events surrounding Sam Bankman-Fried, the future of cryptocurrency is in a dire situation, with investors scared to invest in them. We don't know what the fate of the crypto market is, but things could take a turn for the good or worse in the crypto space. You never know. Make sure to like the video and subscribe to our channel to support us. Let us know your thoughts in the comment section. All the information in this video is for educational and informational purposes based on our research and analysis. Cryptocurrencies are risky assets to trade. Do your own research before taking any trade and manage your risk accordingly. We are not financial advisors and won't be responsible for any loss or profit.